Okay, ladies and gentlemen, I said I wanted to do this entry and exit section, and actually, initially I planned to do this as part of the task section before we got onto the charts, but it's so important that I actually wanted this to be a separate section on its own. Look, I'm gonna be honest with you. There is no, if anyone ever tells you this is the way you should enter the market and this is where your stop loss should be, honestly, they're having you on, guys. You just, I cannot tell you um, how this, I keep saying it, that there's sort of changes I made in my trading that really elevated me to different levels, and dropping this notion that the perfect entry and exit that exists universally um, is there. Once I dropped it, it was like, wow. I actually started to understand the market a lot better because I just started to read it dynamically. And I'll tell you a little bit about what I do, but I'm going to give you some options as well. So for me, when I'm entering the market, for example, if I think that we are essentially doing what? A breakout of value pullback, for example, and we're obviously heading imbalanced on an intraday or intra-period basis. I'm obviously looking to get long of this market. What am I doing? I'm going to be honest with you. My first entry, maybe pre-open or whatever, I put a pilot position on. Um, you've seen it, and in fact, give me a second. So what I'm going to do is I'm just going to pull in the Discord chat from yesterday and show you basically what I was doing. Sorry, just it's the way my screens work. It's a bit awkward bringing the whole thing down. There we go. Let me get rid of that. Guys, you've got to understand the way that I'm entering the market is I don't mean this in an arrogant way. It's many years away from anyone ever being able to replicate the way I do it. Guys, I don't even have, where's my bands, my VWAP bands? I don't have them. I don't have any. I've basically got just the main VWAP, okay? And then these are actually from the weekly, so just ignore that. And then I've just got the 2SD. And you can't even see it here. So literally on a day time frame, I've got the that's it. That's what I'm looking at. I'm not even looking at any of this stuff. I don't have that. Don't have that. Don't have any of this stuff that I've shown you on the intraday, because I've just got so used to over the years being able to identify rhythm with my eyes. I don't even look at it like in that way anymore. Can you see my bars as well? Guys, look at my bars. This is what I mean by high-low bars, right? It's nothing. It's just a bit of ink. For me, I don't care. I'm gonna be honest with you. My thinking, and I tell you, if this is the point, is not that I'm not trying to say to you, oh, you're doing it wrong and what's wrong with you. No, I'm trying to help you. I'm trying to show you where the ultimate goal is, further down the line. This might take you a few years to get there, but that's fine. Is that, can you see how different my way of thinking is to what you may have been told in retail, which is you need to have a clear low and a clear this and a clear that? Guys, I don't have any of that on my day VWAP chart. I've basically got nothing. And I tell you why that is, right? So this is what it comes down to. Do you remember that institutional framework I told you about? And I said context is what, about 70%, and then the intraday is 20%, and then 5% I think was the order flow. That's the entry bit. Guys, I tell you, I have developed hypotheses so many times, thousands of times, that my 90% is so solid. Of course, I'm not going to win all the time, but my point is, my focus is on the context and on the context of the day. This bit that everyone seems to be so focused on in retail, where should my stop loss be, whatever, they're missing the big picture. They're missing The 90%. Why are people so focused on 5% around, oh, I need the perfect entry, NV. Where should it be? Why did you enter there? This, that. Focusing on completely the wrong areas. Professional traders would say, what's your context? Why are you even interested in entering in this region? What's your hypothesis? That's the 90%. I cannot stress this to you enough. That's why I show you this, guys. Look, at the end of the day, it's there. You know, and you saw in Discord, I did this in real time. How many positions, guys? 6 contracts, right? In oil, right? That's $60 a tick, guys. 40-50 pound a tick, right? We're talking serious money. My point is not for my ego. I really don't care. It doesn't bother me. At the end of the day, I've been doing this for years. You know, whether people know or don't know, I've spent so many times in my little rabbit hole, you know, doing this for the last 3-4 years since I left institutions, and I really didn't care. Who knew? It's not that I'm trying to show you this to help you, that you're talking to a guy who's throwing serious money at this without a care in the world where the perfect entry should be, where the perfect stop loss should be. For me, it's much more important that I'm in the right zone. That's all my point is. I'm not being reckless. You know, here, my stops were way down here, but I just never used them, right? And if you look and at the Discord chat, I said, if we build value below 26, I was talking about this region. Look at that value area high. If we build value below here, I'll just stop out, right? I'll look at the order flow. If it's aggressive, the delta's aggressive, market orders are coming in, just stop out. But the point is, look what I did. I entered pre-market, I got out, then I got back in, then I added, you know, I added in several areas. I added here as well. Guys, you've got to understand, I'm building my positions dynamically as I'm seeing more information come in. I just wanted to show you this, to show you that I'm not just talking. This, guys, you know, there's no one out there going to show you this stuff at this size in the moment, trading like this, how an institutional investor does, and really back it up in the way I believe that I do. And the thing is, I don't do it to show off. I do it to give you confidence that this is the right way that institutions enter and exit the market. Okay, it's, you know, it's a serious business, but their focus is not on in fact, let me just get this out of the way for you. Focus is not on this 5%. Okay, you've got to snap out of this. No offense to anyone, but you're paying me for professional institution advice. I can either lie to you and just say, yep, everything is, you know, heaven, utopia, land of unicorns, and we all use a perfect stop loss. I would be doing you a massive disservice and hindering your growth if I didn't tell you the truth. Because by telling you the truth, it's going to allow you to grow as an order flow trader, as someone who reads the market properly. So, what am I actually doing? Well, you know, at the end of the day, like I said, I'm interested in the 95%. If I know solid context, 95% of it is done. Oh, sorry, 90% is done. It's in the bag. It's solid. Guys, I'm going to be honest with you. I couldn't care less whether I enter here, my first position, whether I enter here. You know, this is a human being trait. We're always looking for value. Isn't everyone looking for a pullback? Oh, I'm only going to enter on the pullback. Complete garbage, guys. If the market's here and I've got up a little bit late, or I've come in late, or whatever, and I'm done my 90% hypo and I'm confident this is going to rally, guys, I'll just start there. I don't care. It's my first position. It's my tester of the day. Then I will watch the market. If we then pull back and I'm looking at the order flow, right, and I think the order flow isn't aggressive, basically it's nothing. There's no market orders coming in. The market's just drifting down, maybe because supply has pulled off the gas. I don't necessarily look at supply, I'm looking at market orders. If market orders are pretty flat but the market's moving down, clearly it's not aggressive. Guys, I'm going to add there where at this swing low you're probably stopping out, right? This is the thing. It's not that institutional traders like me are preying on retailers at these lows or whatever, I couldn't care less. It's just that I'm using that liquidity to get into the market. Because when you're selling, who are you selling to? Me. I'm buying here. I'm watching the order flow. Then did you see in that crude oil example I showed you guys, I was adding at higher prices. This happens frequently. Why is that? Because what's just happened here? What's the narrative? We've come up, sellers have pushed, failed. We've pushed up even higher. Now sellers have pushed even harder, failed twice. Can you see the narrative is suddenly the sellers have lost this battle. We've shot up. I see huge aggression coming in from market orders. Guys, I don't care. I've already got my cost basis pretty good because I entered in around here. Maybe I got a really cheap entry around here, so my average is somewhere around here. Fine, I don't mind. I'm managing my cost basis, but balancing that out with probability in my mind. Because if in my mind I'm thinking, all right, here, probability might be quite low relative to what it could be, in the sense that, yeah, I've got my context in, but I haven't actually seen what sellers or buyers are doing at this moment in time. It's still early days. Let me just put a little tester on. Then I see sellers come in, maybe they failed, maybe even seen some absorption here or whatever. So I might add some here. I might stop out. You saw in the oil one trade, I just put a little one contract in here and I just stopped out because I didn't like something that I saw in the order flow or whatever. I just didn't like it, what I was seeing. Then we started to go up and I realized, oh, maybe I made a mistake. So I got back in. This time I saw nice aggression coming in from the buyers. So I actually added some more. We came back in. It's pretty weak. So I got in another cheap entry there. But here, obviously, ideally, I want my average cost basis to be as low as possible. So here I might add in 2-3 contracts versus here I'm adding in one. Guys, it's very complicated. There's so many moving parts. It's like not only am I watching the narrative, I'm also deciding, should I go in aggressively here? Should I add one here? What's that going to have an impact on my average cost? Oh, here I don't mind adding in, a contract or two because the probability is higher. So I'm adding in at a higher price, but my expectation is better. Whereas here, my expectation might not be so high because you call it kind of information risk. Obviously here I've got some information risk because I don't have information that the buyers are going to get aggressive. Here it's more price risk. I'm paying for information. I've got information, but I've got price risk because I've got in a higher price. So I'm constantly trying in my mind to balance these two things out. Here I might not be willing, for example, to enter at higher prices because I haven't seen this narrative play out and haven't seen sellers fail 2 times. If I've seen sellers fail 2 times, I'm willing to enter here. Guys, how do I write this down in a book? Can you see why every trading book you read out there is complete and utter garbage? I can't describe this in a book. This is why telling the truth is bad marketing and why no one tells the truth. Because people aren't going to buy the truth. This is the truth. You paid me for, the truth, how pros do it. I'm telling you this is how you do it. You're not going to be able to do it like this. It's all over the place, right? You need to start somewhere, and that's the point. You can build up to this over 2-3 years of watching this every day.